Hey everybody, I wanted to put together a short explainer for how to use the balance sheet template that you either got from my mailing list or downloaded from my website. So this is going to be this video should be about 10-12 minutes long, and I'm going to very quickly explain what a balance sheet is and what we use it for, and then I will show you how to use the template. So just really quickly, like, what is a balance sheet? It's one of the three main financial statements that companies use. One of them is the income statement. Third one is the second one is the balance sheet. Then there's a third one, which is called the statement of cash flows. That is relevant for corporations, but not for people. These two are important for people. You can use them if you want. Main difference is that the income statement describes what happened financially in a person or business's life over a period of time. So the income statement could show what is the money that you earned between January and December of 2023. By contrast, the balance sheet is exactly what is going on in your financial life at a specific moment. So June 2nd, 2024 would have a different balance sheet than June 4th, 2024, because some amount of stuff in your life might have changed. So it's like exactly what is going on at this exact moment. I like to lay out balance sheets a little bit differently from how, for example, like QuickBooks lays them out. I find QuickBooks to be extremely unintuitive, so I like this setup a lot more. When I'm teaching balance sheets, I tell people think in terms of colors and shapes. So we've got three boxes on this page. We've got a blue box, an orange-red box, and a green box. And these boxes, the left side is assets. The right side is liabilities and equity. And the way that a balance sheet works is that the assets are always equal to the sum of liabilities and equity. And equity, another term for equity is net worth, which is how I have it laid out in the template. So what are assets, liabilities, and equity? Assets are things you own. So my bank account with cash in it, that's an asset for me. My car is an asset. My house is an asset. My investment accounts are assets. My guitar or baseball card collection, those are assets. Liabilities are things that I owe. So the mortgage on my house is a liability. My unpaid credit card bills are a liability. My student loans are a liability. These are all things that I owe to other people. My net worth or equity is the difference between these two. So if you take assets and with using algebra, you subtract liabilities from both sides, you get this. Assets minus liabilities equals equity. So assets, let's say this is $100. Equity is $80. You subtracted the two, your net worth is $20. If you have cash of $100 and you owe $80 of that cash to your neighbor, then what's left over is your net worth, which is $20. What goes on a balance sheet typically? So cash, jewelry, bank accounts, investments. These could be stocks, bonds, any private investments you've done if you've invested in somebody's startup or somebody's food truck. Pensions that are vested. Real property is physical property, like real estate. Intellectual property is an asset. It's oftentimes difficult to ascribe a financial value to it, but you could put it there if you think it's significantly valuable. Any vehicles you own. And then your any other personal assets that you have. And then what are the typical liabilities? All these loans. Taxes that you owe but haven't paid are also liabilities. This is money that you owe to the government. Your net worth can be negative. So this is oftentimes the case for students that are just getting started. You may have a lot of student loans. You have no assets of any kind. Your net worth is negative. But in theory, if you got a valuable education, which you purchased using these student loans, you will be able to earn a lot of money, and then this stuff will start to pile up. So let's go to the template itself. This template has 2 pages, the instructions page and this. The balance sheet page you're going to make multiple copies of. So the way this works, put in your name here, and it fills out. These concepts we just talked about in the first 5 minutes of this video. The next 5 minutes are just going to be how to use this thing. This balance sheet is set up for one person. So if you have children that have their own assets, they need a separate balance sheet. If you're married and you filed your taxes jointly and everything in your marital partnership is owned jointly, then you can have a shared balance sheet between you and your husband or wife. Any business that you own should have its own separate balance sheet, unless it's like a sole proprietorship. If it's an LLC, even if you're the only owner, you should still keep a separate balance sheet, because we still want to distinguish what's a business asset and what's a personal asset. That's important when it comes time to file taxes. Every time you create a copy of the balance sheet, I want you to put a new date. So, for example, this one, let's say this is going to be my balance sheet for 05/2024, and I might have, like, today's the 28th, 05/2024, and then if I want to make a copy of this balance sheet to use, let's say in 2025, I would just do move or copy, create a copy, and then I would rename this the May 5th one. The reason we want to do this is we want to see how the balance sheet changes over time. So you're going to keep a record of, for the next 10 years, how all these things changed. When you're gathering all the numbers, so these are just made up numbers. When you're gathering the numbers to do this, ideally you do it all on the same day, because remember, the balance sheet is supposed to be a snapshot in time. Now, of course, for most people, this stuff is not going to change drastically from day to day. Your investment accounts might change significantly if there's like a market crash between the day that you start this and the day that you finish it. You're not going to, ideally, you should not be making big changes to your investments based on the schizophrenia of the market. So in a way, it doesn't even matter. We care about the trend over a long period of time. But just for hygiene, let's call it financial hygiene, pull these numbers as close together in time as you can. You can modify the categories or line items if you need to. So, for example, if you have 4 credit cards, just add a column like this, and you'll see it updates dynamically. Just make sure that when you're adding things, you don't like break these formulas. Okay, so these little purple flags are comments from me. They just explain little things that are going on here. And if you find them annoying, you can just delete them. But these are things that I thought were important to call out, and I felt like it was easier to use than footnotes. And then the notes column, this is for you. So, for example, you might, let's say I just want to keep track of what the interest rates are. I might say that this credit card is at 18%, this one's at 22%, this one is at 13%, and this one is at 18% or 15%, whatever it is. And this is just a way for me to keep track, like if I want to remember what are all the interest rates on all these things. Or if I just want to make a note that this personal home last appraised in 2017. So that might be just a note that I know this number is not accurate. This number's dated. And that's fine, as long as you keep track and you know that it's not entirely accurate. And then let me just take the last couple minutes to talk about what these categories are. So cash and cash equivalents. The way I've laid out this balance sheet is that I try to match assets with corresponding liabilities. So short-term assets like cash and cash equivalents are matched up against short-term debt. Real estate is matched up against the mortgage that funded it. So your personal home has a personal home mortgage against it. Your investment property has an investment property mortgage. Let's say that this investment property, let's say you own one and it's worth $400,000, but there's no mortgage. You might make a note, mortgage paid off in 2022, whatever it is. For this HELOC, you might say that HELOC taken out in 2021. November 20, whatever it is, you can keep track of it. So real estate lines up to mortgage debt. Vehicles line up to vehicle debt. So your Toyota Camry has a loan against it. The minivan, I put a note that the minivan loan was paid off. You could also note it here. This could be anything you need it to be. Motorcycle. Let's say you're a rich person, you have a yacht. You're really rich. Yacht. Number 2, whatever it is. Investments, these are going to vary. So if you've had multiple government jobs, you might have multiple pensions. So just create individual line items. I would only record pensions that are vested, or you're very close to vesting. Tax advantaged accounts, this is very US focused. In other countries, you may have to change what these are, but I would actually write in the description the brokerage that I have the account at. So let's say that just helps me keep track. So this would be this kind of document is going to be really useful if you're ever putting together a will or a prenup or anything like that. Or even if you're going to a bank and you're trying to get a business loan or a personal loan, sometimes they'll ask for records of your personal finances. This thing is just really helpful to have if you want to get a mortgage, for example. Health savings account, whatever company you've got your health savings account at, I would list. And then if your jobs, I would say, for example, like I had one, Kinsey, Roth 401k, and then I had a Federal Reserve. That's how I would do this. And this would be, for example, I have a separate non-tax advantaged. And let's say I had another one at Robinhood. Whatever it is. Life insurance policies, you may have more than these, just create more tabs. Private investments, this is going to be highly variable. Most people will have no private investments. I have a bunch. So you might need to create more line items for these. And for the private investments, I would list them. I put a note here. I would list them at the price you paid for them. Because private investments in general are very illiquid. It's very hard to figure out what they are actually worth until they get sold. So if you invested in a startup and let's say you invested in the seed round and it had a Series B and it had a new valuation at the Series B, I would change the value to reflect the Series B valuation. But other than that, I would keep it at the price that I paid it at. And then this is self-evident. Anything else that you think that you own which is valuable that you actually can sell for money. So for example, this mug has value. It's not zero, but it's not worth recording because it's going to be very difficult to sell, and I would get like probably 10 cents for it. Not worth it. So only things that have reasonable value and that you think you can sell reasonably quickly. Liabilities, we talked about the short-term debt, credit cards. You might have other types of liabilities that are short-term in nature. Short-term is typically has to be paid off within 12 months. So credit cards, you pay them monthly, and I would consider them a short-term liability. In general, we want this number to be 0 for people beyond just the 1 month balance. Mortgages, self-evident. Vehicle debt, self-evident. Other long-term debt, most people should not have anything other than student loans. Personal debt of just personally borrowing money from a bank is pretty rare. And for most people, this number should also be 0. And then we get, these two numbers get auto-calculated. The difference between these two is your net worth. So you can see the formula. Assets minus liabilities equals your net worth. So that's a balance sheet. Let me know in the comments or by email if this is useful. Let me know if you want to make any tweaks to it. Let me know if you want any other versions of this. I'm actually going to be making a similar version of this personal balance sheet, but for minor children. So a lot of these categories will be stripped out, and we'll have a bunch of the investment categories that people normally start putting in their kids' names. So that's it. Thank you all for watching. And if you haven't already subscribed to my mailing list, go to akashkanoja.com. You can find my emotions and finance notes here. You can find my different guides here, which are both personal and business. You can find my general economics commentary here. Just subscribe here. It's free. And I'll see you soon. Thanks. Bye.